Well, now it is time for the markets with Leighton. You say we had some mixed signals from the cattle sector.
That's right, Artis. Two different reports, one positive, one negative. We'll have that story in a moment. Also, since our last program, U.S. catfish processing is still down. Dry weather in Russia drives up wheat prices, while huge stocks drive cotton prices lower. We begin with conflicting reports about cattle. The May 18th Cattle on Feed report and Tuesday's cold storage report each told a different story about the beef sector. Extension Ag economist John Michael Riley joined me in studio on Wednesday to sort out what it all means for producers and their industry. John Michael, Tuesday the 22nd, we had a cold storage report out, and the bullet point seems to be that was bearish for cattle. Let's go into detail there.
Quite a bit. The market has reacted accordingly. Inventories appear to be growing in terms of frozen beef, both boneless and bone-in, up 17% versus a year ago, 3% month over month, 517.5 million pounds of beef in cold storage. So, as I said, those inventories seem to be growing. It points to maybe a lack of movement of beef into retail stores. So that never does look good from a demand picture. That's especially as we move into grilling season. That's not the news you want to be getting, and it hasn't looked very good if you look at prices today in the market after the report was released.
So the market is kind of taking this as maybe an indication of lack of consumer confidence?
Not so much confidence, but just lack of movement. So consumers just apparently aren't picking beef up at the retail meat case like they have been.
Mm-hmm. All right, we had a second major report out since in the last 7 days, and that was a cattle on feed report last Friday. What did those numbers tell us?
The numbers told us the opposite of what the cold storage did. A bullish report, cattle on feed for the first time in 2 years dropped or below year-ago levels, down about 6%, just over 11 million head of cattle on feed in feedlots over 1,000 capacity. Placements down pretty hard. That was pretty much expected. Placements down about 15%. So we are continuing to see declining supplies of beef cattle in feedlots, and that report was bullish. But the market didn't seem to, I was shaking my head as most were when the market reacted negatively on Monday. Didn't seem to point to a negative reaction from the market.
So what are we to take away after this week when you kind of got conflicting reports here about the cattle sector?
Well, it is conflicting reports. The cold storage, you hate to see these inventories grow, but the fact is that we're going to continue to see declining numbers of head of cattle in feedlots, which should reduce the total inventories of beef. Declining gas prices is another thing that we like to see from a consumer demand side, but it's going to be moving into grilling season with these rising inventories. You don't like to see that.
Because until supplies start dwindling down enough, that might help prices somewhat.
We should see that, but we're just not currently today we're not seeing that.
We shift from cattle to the pond bank now, where U.S. catfish prices were down a little from March to April, but still above year-ago levels. These numbers from the USDA were released Monday the 21st and are for the month of April. The average pond bank price paid to U.S. producers was $1.17 per pound. That is down 3 cents per pound from March, but still 2 cents above 1 year ago. Now, farm sales totaled 22.5 million pounds round weight, a decrease of 5% from April 2011. Processor sales totaled an even 12 million pounds, a drop of 14% from April 1 year ago. Our trivia quiz will transition us into the row crop side of the markets, and here's this week's question. What is the official state soil of Mississippi? Is the answer red clay, prairie, Natchez silt loam, or sandy loam? We'll tell you in a few more minutes. Wheat contracts were caught up in a commodity-wide sell-off tied to the Eurozone debt crisis at midweek. But wheat had been sharply higher until that point, primarily due to dry weather around the globe, particularly in Russia. Analyst Naomi Bloom says the bounce that the weather concerns produced for wheat was certainly welcome.
That market had been oversold, it needed the bounce, and so you saw mostly short covering, which propelled the market higher. Now we've got the Chicago wheat and the Kansas wheat at $7 resistance, with the Minneapolis wheat with $8 resistance, and that's likely to hold for the time being. The situation in Russia, it is serious. The last time this happened in 2010, it decimated a third of their crop, and that did make the market rally. Now, at the same time, we do have ample supplies yet globally, so that's going to keep some pressure over us. And the crop here in the U.S. for the winter wheat is still rated 60% good to excellent compared to a 10-year average. The 10-year average is 47% good to excellent, so we have crop.
Huge world stocks continue to be the anchor around the neck of the cotton market, so to speak, as the end of May approaches. December futures fell below 68 cents at one point Wednesday. Analysts say concerns about a weakening Chinese economy and lost market share are other factors driving the cotton lower. A strengthening dollar also not helping the negative sentiment there. Of course, pressure from the dollar has been a problem all across commodities this week. Arkansas Farm Bureau analysts reported through AgFacts that corn was about the only crop holding its ground heading into Thursday, our Farm Week production day. Midwest trader Jamie Kohaki recently had this assessment of what he sees happening in the corn pit.
We're range bound here. I think we're in a broad 30 to 40 cent choppy range bound trade. I think till mid-June when we see more weather and see if El Nino pans out or not and how dry it does get. But 530 to 540 is a top side right now, new crop in my opinion, unless you throw in some weather somewhere. Like you're saying with these large acres, large carry out, pushing the 12, 13 carry, maybe up around 1.8. That puts a crimp into the red D's, the 13 Christmas contract. I would be seller up in there at 540 as well here for short term until weather turns more bullish.
Just before the feature, here's the answer to our trivia quiz. The correct choice this week is C. Natchez Silt Loam was designated the official state soil by the Mississippi legislature in 2003.